If you trade Fibonacci retracements, these are crucial to know. Having this knowledge can make or break your Fibonacci trades. So this is pretty much a follow-up on my previous Fibonacci video, except this time I'm going to show you how to use the Fibonacci retracement tool to track your take profits and your stop loss. Let's get right to it. All right, so here we are on TradingView. And I'm just going to show you these Fibonacci settings really quickly so you can copy them out for yourself. And this is really important to take note of, is this negative 0.27 and then this negative 0.618. Definitely take note of that. That's going to be your take profit levels. If you want to set it to a different color so it stands out for you, it wouldn't hurt to do. I definitely do it myself, so it helps, just the area stand out a bit. But anyways, yeah. So let's get into some examples of using the Fibonacci retracement tool to track your stop losses and your take profit. So first, let's find ourselves an example. I like this little movement right here. We see this lower low, then this lower high, then this higher low, and then this higher high. So showing us a break of structure on a lower time frame, and then a nice little retest around this area here. So let me just draw a quick level of support and resistance right here. We see this level right here, well-respected level on this lower time frame. And then I'm gonna get my Fibonacci tool and draw it from this point A to this point B up here. Lovely, lovely. Sick. So I don't need to have it dragged out all that much. I'm just gonna drag it to where the actual entry is. So measure the top of the wick. So here we see a nice area on the 50%. So for this example, you wanna place your stop loss either past the 61.8 or in between the 50 and the 61.8. Reason for this is going to be to give your trade some breathing room. In this example specifically, I would recommend below the 61.8 just because we have the structure here. We see price rejected the 61.8, dropped down, broke up, and then retested it as a form of support almost, if you will. So let's just get this long position calculator, put it right on the 50 line. And we're gonna drag our stop loss to below this area right here. So it's a little bit below the 61.8. Let's set it up correctly. So that's 62.8 pip risk. And you might say to yourself, well, I can take it to nearly this 100 range here because hey, that was the previous high. And also this area was touched. Sure, that is a possibility. It would work out for you. But if you want to maximize your risk reward ratio, what we're gonna do is either target the negative 27 or the negative 61.8. At the negative 27, we're hitting a 1 to 4 risk reward ratio. So if you risk $1,000, you make $4,000. That's pretty solid. At the negative 61.8, that would have been a 1 to 6. So if you risk 1,000, make 6,000. Super killer. So we fell short of that. That 61.8 would have been 375 pips. It actually only reached 335, so 40 pips short. But this negative 27 point did hit. So one thing to consider, once price hits this area, you could close because this is either your set take profit or at least an area of interest that you're looking for. Price actually hit. Or, you could move your stop loss to the 0% because the 0% looks like a strong level of support. We had all this rejection right here, that wick rejected. We have rejection over on this side over here that I just highlighted. And now we have price creating new highs past that zone. It could be a potential area to set a stop loss. So let's look for another example. Now, here's going to be a selling example. I bumped up to the 15-minute. Previously, I was on the 5-minute. We're going to measure from this new push, point A to point B at the end of the wick. And what we can see from here is we have some nice rejection going on in this 38.20 zone. So we see price actually hit that 50 exactly, rejected off of it. If you remember in the previous example, I stated that you wanted your stop loss to be a little bit past the next zone. So previous example was a 50, we wanted it past the 61.8 because the structure also supported that, but it's just a good safe area to put your stop loss in. If we were to have taken a sell at this 38.20 rejection, we're gonna place our position here with our stop loss a little bit above the 50, somewhere in between, 64 pips. And this is what's really interesting about this -27 zone and the -61.8 zone. So price hits this -27 zone, and let me zoom in so you can see it very nicely, and we have a strong rejection upwards, and then the following candle, tons of momentum comes through, and then we hit that -61.8 with a rejection on that side as well. So there's a high likelihood that it's previous structure, you know, further down in the past. But that's what's really beautiful about these zones, is you don't really have to know what the structure was looking like around these areas or these key levels, but they still have a likelihood of working out and really give reasonable areas to set your targets at. Typically, I like to set my first target around the 0% if I'm actually cashing a Fibonacci trade, and then if there's a lot of volume that follows through on the next candle that has already breached the 0, typically I'll run into the -27, or if there's some other structure that presents itself very clearly, I would do that instead. So here at the -27, we see that we have a 1 to 3.5. So if we were risking $1,000, I'd be risking 1,000 to make 3,500. And then on the other end at the -61.8, this is a 1 to 5.5, so risking 1,000 to make 5,500. And I really hope that this encapsulates the power that knowing this about the Fibonacci retracement tool holds. It's truly something that can revolutionize your trading, and it's just adding a bit more to your Fibonacci retracement method. So you already know how to use it to track for retracements and, you know, continuations and trends, whatnot. Cool. And then you add the potential for entries. Awesome. And then now you have the potential to figure out areas to put your stop losses and your take profits. So yeah, I hope you really like these two examples. You guys saw a buy example and then a sell example, and you can really utilize this tool this way at the 38.20, the 50, the 61.8. If you want to experiment with other levels of retracements, by all means, do so at your own will. It's something that I've had experience with, so I can't recommend it or say, hey, it's gonna have the potential to work. But you know, I would highly recommend trying this out. Feel free to let me know down in the comments if you guys have tried this out, if you already even knew about it, or if you've seen other people have success with it, if you yourself have success with it. If you found value in this video, feel free to drop a like and subscribe to the channel. And until next time, guys, I'm out.